Hello, everyone. Welcome to today's Global Horizons virtual webcast. I'm Dana Peterson, Chief Economist and leader of the Economy, Strategy, and Finance Center at the Conference Board. It is my pleasure to co-host this conversation with our esteemed panel of speakers as we focus on how cryptocurrency will impact traditional financial institutions and how cybersecurity can keep up with fast-paced developments in this area. Well, before we begin this discussion, please note that CPE credits are available for this webcast. If you would like to receive credits, please stay online for the entirety of the webcast and click the link in the CEU request pod in the bottom right-hand corner of the webcast console to sign up for the credit. In addition, please make sure to click on the 3 pop-ups that will appear on the screen throughout the program. During this program, we will focus on the following topics. Those topics are Segment 1, Financial Inclusion, Segment 2, Regulator Challenges, and Segment 3, Cybersecurity and Geopolitical Challenges. It will also be followed by a Q&A. At this time, I'd like to pass it on to my distinguished colleague, Biga Kumar.
Thank you, Dana. So, the COVID-19 pandemic has increased the use of digital payments worldwide. The trend towards digital payments has been building for a long time. The pandemic has accelerated it. And one of the main reasons for that is that cash is dirty. It's expensive to print and circulate, and it more easily evades financial transparency norms. As this new trend gains momentum, new players and new services are entering the market. These include new financial services firms, but also big tech companies such as Google. These players threaten to challenge not only established financial institutions such as banks, but also popular instruments such as credit and debit cards that all of us are used to using. This dramatic change promises great benefits. It promises, for example, to make economic transactions cleaner, cheaper, smoother, more transparent. But it also brings enormous new challenges. How do we make sure that these new digital payment services are inclusive financially? How do we effectively regulate them? How do we ensure that the geostrategic and cybersecurity challenges of this space are addressed? To address some of these questions, I'm joined today by an excellent panel. Michael Mosier joins us from the US Treasury. Piyush Ranjan is Vice President at Google. He is principally responsible for managing their fintech and digital payment services. Stephanie Schultz co-leads the emerging strategic partnerships at American Express's Digital Labs. And Jennifer Lucas is America's payments consulting leader for EY. Welcome to one and all. Please be reminded that the call today is being recorded and it will be made fully available online after this webcast is over. Let's get straight to it. Now, globally, 1.7 billion people are still unbanked. About 3.2 billion are still offline. The pandemic has increased the economic penalty for those that depend on cash and lack digital access. This creates very difficult questions about the role of digital payments and financial inclusion. Before we hear from our panel about the trends in this space and the key challenges, I would like to hear from our viewers first. Can we please launch our first poll? Post-pandemic, I expect the proportion of cash payments in total global payments to fall to 15 to 20% by 2023, or 10 to 15% by 2023, 5 to 10% by 2023, or below 5% by 2023. Let's give our viewers a few more seconds to cast their ballot. Well, the numbers are stabilizing. Okay, let's close the poll now. So most people expect cash still to be relevant, to account for about 15 to 20% by 2023. Michael, let me go to you first. I want to go around the panel once to quickly sort of gauge your views on this. Are you surprised by this? Would you have chosen differently?
Thanks, Mika. Thanks for having me here. I think that's about what I would think it would be. Certainly the interest is there, but it's not just an issue of interest, it's accessibility. So, there's got to be a measure of low cost, sort of reliable equipment and communications. And it's that's going to take some time, whether it's satellite, sort of a Project Loon, or in the crypto space, you've got near field communications and mesh, but it can't just be assuming that everyone's going to have Comcast or whatever to get up. So that sounds about right to me. I mean, it's certainly been accelerated, but there's a lot to do.
Piyush, do you agree?
Yeah, I agree with Michael. I think also this is the digitization is a long-term change, and COVID definitely has accelerated things, but from 30% to 20% in 3 years is actually a big change in human behavior. So while it is the least aggressive, it still is a big change.
Stephanie, are you surprised? We can't hear you right now. Okay, Stephanie? Yes, thank you.
Can you hear me? Okay. I was just going to say, I think I would echo my fellow panelists and just saying payments is a really complicated ecosystem. So it certainly, while we're seeing an acceleration of things post-COVID, it takes a little bit of time.
Sure. Jennifer?
15 to 20% reduction in 2 years in the cash mountain that we are climbing is highly vast and disruptive. I don't think it's going to be that's a cliff based on the cash usage today. My personal opinion is around 5%. I mean, that feels a little bit more realistic. But remember, cash in the United States, cash hasn't been declining. It's still king. I mean, and maybe it's declined now, but it's the largest volume of transactions that we know of, and so to get a 15 to 20% reduction in 2 years is dramatic. So I'm a little bit more on the cautious side of, I think it's definitely changing. I think it's accelerating. I think it's better than before, but it's not. I don't think it's a cliff fall yet.
Great. Jennifer, if I may, let me stay with you and ask the first key question that we have for this segment. How can digital payments help countries cope with the pandemic, and where do you see the response varying between developing countries and the major developed countries?
Well, I think in a pandemic situation where we've seen the most change, there's two sides of it. One is this concept that cash carries disease, which I'm not a scientist. I'm not going to provide my perspective there, but I always was told when we were counting money or change, my parents told me to wash my hands afterwards. So it's not a new concept that the money is dirty. But so we've got that, and I think I've seen some public service announcements and education on, try to use less cash. And of course, in the United States recently, a lot of cashless merchants coming out, and actually a coin shortage, which means we have a circulation problem in our coinage. So exact change is not provided, so it's a deterrent from using cash. I think one of the biggest things that's different is cash flow. COVID has required or made cash flow an acute issue for migrant workers, small business operators, and anybody that's not getting living paycheck or doesn't have a paycheck already, they're very cash dependent. So the cash flow side is really where I think the digital payment capability is really going to be fostered in the community, and I think that's really where we're going to see it accelerate. Real-time payments, getting money into the hands of people immediately through a digital capability with stimulus checks or stimulus payments, distribution is really where I see a lot of activity.
Okay. Stephanie, do you see cash flow as the core issue here, or do you see the issue a little differently? How can digital payments help the country cope with the pandemic?
Sure. I mean, I think what I'm seeing at least is more and more consumers are willing to try digital and contact-free payment methods now than ever before. So a recent U.S. study that I read said that 1 in 5 U.S. consumers tried contactless payments for the first time during the pandemic, and then over half of them said they'd be willing to use it again after the pandemic. So I think we're seeing this shift in behavior, and I think we're going to see some of that behavior actually stick post-pandemic. Luckily at American Express, we have laid a pretty solid foundation in terms of offering digital payment capabilities to consumers and merchants across a variety of different means, through partnerships with mobile wallets like Google, through offering more and issuing more contactless cards to customers, and through partnerships we've done in the peer-to-peer payment space. So, recently we had a partnership with PayPal and Venmo where we enabled through the Amex app customers to take a transaction and split that with their friends and family. And we've actually seen some pretty strong uptake in adoption and really just seeing the behavior shift to reflect the new normal. So rather than that usage being centered more around things like travel and entertainment, it's shifting to essential purchases like food delivery. And I guess the last thing I would say is I really think that we've been seeing how digital payments have really stepped in to help bridge the gap between what was traditionally offline to the online world. And so you're seeing that through a number of use cases. Take restaurants for one example. A lot of restaurants are now delivering menus instead of having a paper menu, delivering it through a QR code, and then in some instances actually completing the payment afterwards. Or retail shopping, where a lot of that used to be offline. Now that's all starting online, and people are making their purchase online and then doing a curbside pickup in store. So overall, I think we've really just seen digital payments filling a number of important needs across the board for both consumers and merchants.
Okay, Michael, how do you see the situation from a government perspective as digital payments try to, what Stephanie called, bridging this gap between the offline and the online world?
Yeah, I think it's certainly been something that has helped a lot in terms of the sort of economic impact payments that need to get out. The sort of the speed and traceability means that you're able to get pinpointed transactional stimulus out there much faster. And then I think also relevant to us at Treasury, at the Financial Crimes Enforcement Network, it's also sort of helping with the recovery of fraudulent funds, just the ability to trace that and also to sort of get those back. We've been working since the pandemic with law enforcement and international law enforcement, including for their economic stimulus payments that have been involved in fraud, and been able to help them recover almost $325 million. And that's partly just because of the sort of traceability and then the speed in both directions. So it's been a very important piece of it.
Okay. Piyush, may I go to you next, please, and switch gears slightly. What are businesses doing, in your view, to increase financial inclusion through products and new services in the digital payment space?
Yeah, where do I start? How much time do I have? I think there is a whole lot of stuff which we all are doing, and let me actually put it this way. Like, if you think about information, there was a time information was always printed in paper and kind of kept in books in libraries. And it was not very accessible to a lot of people in the world because there was a lot of hurdle in actually getting to the information. The same thing is starting to happen to money. What internet did was digitize the information, and now anybody anywhere in the world can now, deal with it. The same thing is happening with money. The more money gets digitized, the more accessible and more inclusive it will become. Now, what we are starting to see as businesses is that the countries in which it first starts is the mobile first nations. Like, whether you take like places like Kenya, India, China, I mean, all of these have a strong focus on mobile first. The smartphone revolution has been amazing. I think it's the first device which will electronic device which probably will be in hand of every human being. And that has become the platform on which all of this financial services are coming up. Therefore, they are by nature going to be very inclusive. But I'll give you some examples. When we think of financial inclusion, we think of the unbanked, and there are 2.5 billion people who are unbanked, and that's a huge market which we have to go address, and a lot of companies are actually trying to build solutions for new to bank. And then there are a lot of other solutions also. For example, even people who are banked, there is a access and security issue for people who have relatively less money, like 100 rupees or $100 might actually mean very different to different people, and the less money is accessible to you, the more it might actually mean. So now in that case, like there are examples like in maids in India are saying to people whose house they work in, saying, please don't give me cash. Please transfer it to me in my bank account. That was not possible before. It required them to grab cash and then actually either spend it that way or go to the bank, and they would lose money along the way, or there would be other things which would happen which made them feel less secure. Or migrant workers. We were talking about COVID seconds ago. Migrant workers in many of these economies are able to still receive money from their employers or dues and things like that, even when they are far away from where they used to work. Or when they are away from home, they're able to easily send money at home. All of these are inclusive scenarios. Payday loan is a great example. It's a $9 billion industry in the U.S., but we know that more and more of the banks coming in are giving few days advance on your paycheck once they are able to predict that you have few days. So I can go on and on like this. Merchants are another space. We had an example, a guy called Vijay Babu who does laundry in India. It would cost hundreds of dollars for him to set up a point of sale and do things the old way. And with digital payments, his daughter set him up on a smartphone, and now he's able to get orders on the phone and be able to get his payments on the phone. A lot of friction has been removed. So to recap, what I would really like to say that it is just like digitization of information created internet revolution, digitization of payments will create a whole lot of services. We still have far to go, but it's a very promising future for us.
Okay, Michael, I want to go to you next, please. I mean, it makes sense that Piyush has painted a rather optimistic picture, and there are indeed very serious grounds to be optimistic. But in the sort of medium term, we know that there are serious accessibility gaps. Women are less likely than men to have internet access, to have access to a smartphone. We know that in different parts of the world, the quality of internet access varies enormously, if it exists at all. The cost of accessing data can be prohibitively high for communities. In this context, and given that some element of technological stranding is likely to continue for the medium term, should we be looking at a cashless future?
Well, yeah, I think in the longer term, I don't know that it's ever going to get cashless. I mean, people have been transferring value in many different forms for as long as we can go back. And even now in sort of the cryptocurrency boom, we've already moved from yield farming into non-fungible tokens and different ways that that's sort of a value transfer. So I don't think to me it's, and I'm coming from a policy perspective that's more on the illicit finance concerns of it, but I don't see it going completely that way unless we sort of close that gap of accessibility, certainly. And even then, I think people are going to transact in different forms of value, even if there's a digital option. And from a purely illicit finance perspective, we certainly don't want to be closing people out of one avenue of transacting value and just essentially moving them to another. I mean, you've always had trade-based money laundering, and cartels are going to move money, whether it's in synthetic opioids or goods that have been counterfeited, letters of credit. I mean, there's so many ways to move value, and I think we don't want to be pushing people into activity that looks suspicious when it's really not, and then obviously has much higher fees involved in it. So you're not sort of expansively growing everybody. You're just sort of pushing folks out. So I think even from an illicit finance perspective, it needs to be an accessibility issue before we talk about sort of pushing things purely digital.
Okay. Stephanie, how do you see the regional technological gap then affecting the adoption of digital payments? Michael stressed the issue of accessibility, but right now we know that access is uneven.
Yeah, I mean, I think there are a variety of different reasons why people use things in different places. So accessibility is certainly one thing. What different devices and tools are people willing to adopt, or what has the industry enabled or not, and is there a switching cost? I think a really good example of this is the contrast of mobile payments in the U.S. and China. And in the U.S., there was really decent penetration of card-based payments. That's been popular for quite some time now, and they work pretty well. So mobile payments had been pretty slow to take off when they first launched here. And you look at a place like China where mobile payments and QR payments just dominated with WeChat and Alipay because the main alternative was cash, and that was a far less attractive option for users. So to me, it's not really all about the technology itself, but it's also about what's the job that you're solving for the customer and what's their best alternative, and are you able to do that meaningfully better than they could have otherwise had that job solved for them today. Another good example I like to highlight is Starbucks in the U.S. So they were one of the earliest, most successful mobile payment apps here, and I think it's because they honed in on this really habitual use case, people getting their daily cup of coffee. And it wasn't just around improving the technology for payments, but it's how they took that use case and they layered in engaging rewards and loyalty components, and it's how they added value-added services to a user. You can now cut the line and pre-order your coffee and get it faster. So that alternative was way better, and it wasn't just about that shift in technology.
Yeah. So Jennifer, if I could go to you. So Stephanie has highlighted a good example, in a sense that Starbucks has sort of trailed the blaze. So then the question is, are other businesses following that blaze? Are businesses doing enough to promote financial inclusion in a way that serves their business interests but also adds value to the customers? I think you may be muted, Jennifer.
I'll answer that from a U.S. perspective. I think the financial institutions and the fintechs come at it from different angles, but they end up ultimately in the same place. The reticence on inclusion in the United States is it's not technology, as Stephanie said. It's more cultural concern and maybe a little bit of bad experience in the past, whether it's fees or some kind of negative outcome. But what we're seeing is a lot of providers, whether they're incumbent financial institutions or large fintechs, going at it in terms of lower fees, more transparency, better education, and quite frankly, less gotchas, like overdraft fees and loan type of negative activities. So I see a lot of convergence there. Are we doing enough? Absolutely not. I do not believe that we're doing enough. Economic incentives are difficult. I've been part of financial institutions where you're trying to make a business case on a more inclusive product, and it is difficult. It's not easy compared to an incumbent large deposit product with a lot of fee income. So, but the mentality is there about better education, transparency, budget management, and working with data aggregators to make sure that the person understands, okay, you're going to kind of overdraft based on your behavior and your spend pattern. You're going to overdraft by X. You need to put some money in so you can avoid these fees. So I think there's more and more technology and more data, as Piyush mentioned, available to help and provide equip people with financial inclusion products. But I think we can do a whole lot more, and I'm optimistic that that's going to happen over the next 5 years.
Thank you. Jennifer, I think this is a good point in the conversation to draw a line under this issue and move the conversation on to regulatory challenges and ask, really, are businesses and regulators doing enough? Dana, over to you.
Sure. Thanks, Meega. I think, whenever people think about regulation, bad things come to mind, but there's also another element to that where regulation can potentially provide guardrails for a sector and also to protect consumers. And sometimes even businesses prefer a little bit of regulatory guidance. So we're just going to put up our next poll before we begin the discussion. And essentially, the question is, what is the role of regulators in the expansion of digital payments, and what is it likely to be? So is it constructive towards creating guardrails for industry and protecting users, or is it neutral in their impact on new and existing players in their operations, or do we think that regulators or regulation is disruptive for digital payments innovation and unhelpful for consumers? So we'll give it a few more seconds before we close the poll. It looks pretty decisive. All right, let's close the poll.
Close it before it gets worse for the regulators.
So, sorry, maybe I closed the poll a little bit too quickly, but certainly it looks like 63% of people, of our participants, actually think that regulatory guidelines are a good thing. Not only for the industry, but also for users. Michael, what are your thoughts about that?
I wouldn't argue with the majority, but yeah, I think it's, it is I think in a light sort of principle-based way, it's critical to have some sense of guardrails and certainly a consumer protection element, because you're not going to build something if people don't want to use it, and people aren't going to use it if they don't have a measure of trust in it. So I think to get adoption from consumers and grow things, you're going to need to have a sense that there's a basic level of infrastructure security to it, and a sense that if I put my credit card in or I put my Bitcoin in, that I'm going to get what I expect. So I think hopefully, I think it also goes to a sort of scalability issue. I mean, you want some measure of, if you're building something, a measure of principle-based standards that are relatively harmonized, or at least give you an expectation that at the building stage I can go ahead and put in what someone else who's thought about what it's going to take to keep consumers safe or keep their money going where it should and not to fraudulent actors, has someone that's already thought about that, has set some principles out, and I can build that in now instead of building a product and then shipping it and then finding out we have to change everything. So I think in terms of the uptake and the growth, both from a building and scalability and from a consumer trust to drive the growth, you're going to want some measure of flexible regulatory principles, for sure.
Piyush, what are your thoughts from an industry perspective?
So I think from an industry perspective, regulations are one of the key ingredients of a sustainable, strong digital finance system. I feel like the businesses, the regulators, the financial institutions, they all have to work hand in hand for the system to mature. We at Google firmly believe that, and we have seen that work in every market which we operate in. Classic example is in India, where the Indian government produced this protocol called UPI, and we worked with them, and we built on top of that. We worked with the banks, and everybody participated in there. We have also worked with them on this fundamental the need they had for data localization, where we are a global company, but India had a regulation that all the data which is financial data of users in India should actually stay within India. So we were able to build our technology stack in a way that we are able to address that and not have that data be outside in India for any purpose. So we do all of these, and it's a partnership which we keep progressing on. I think it's something which all of us are learning, how exactly will the world evolve, but everybody is kind of moving hand in hand in there. There is, of course, the biggest thing which I will say is we live in a global world in the internet world, and as we try to digitize money, there is more cross-border use cases which we have to keep thinking about, which might not have been that obvious earlier. And that is where we are all kind of working together to figure out how this should work very well for our users.
Stephanie, were you surprised at all by the results of our poll?
I wouldn't say I was surprised, but Michael, don't be mad at me. I'm going to lean a little bit more neutral to positive on this one. I certainly, think that there are many instances where regulation has been really helpful in creating the right guardrails, but I work on an innovation team, and so when you are creating kind of like never been done before use cases, there are a lot of times where there might be an existing framework or regulatory guidance where your use cases are specifically contemplated. And so that can cause a barrier for innovation, or the guidance is a bit gray when you apply it to a new use case that hadn't existed before, and so we're kind of left up to for interpretation, which can be a little bit tricky at times.
Jennifer, what are your thoughts?
I believe that regulation, can you hear me? Yeah. I believe safety and soundness is paramount in any financial product, and establish trust. And in order to make any kind of inroads in adoption, change, whatever, there has to be that level of trust. And I believe that regulations, along with standards, provides that foundational element that everyone can innovate on top of. Stephanie is absolutely right. The gray areas bring in legal risk and compliance concerns that really stall innovation. But I do believe that particularly in the United States, regulators are open. We have innovation centers with them. There's a lot more cross dialogue. But I do know that because the regulations aren't keeping up with the technology and the innovations, it does cause quite a bit of workaround and obstacles. I think another example is really great, that where you see regulation creating competition as well as inclusion is PSD2 in the UK. Seeing that kind of level playing field, regulatory oversight of both bank and non-bank providers, and kind of slightly forcing collaboration. I'm sure it wasn't openly embraced by the incumbents, but I think we're seeing signs of promise there in terms of data exchange, financial usage, and innovation on products and services that didn't exist before. So I think it's a very constructive, healthy discussion, but I do think that the regulations are slow to keep up, and so how do we make those more agile would be an interesting project.
Thank you. Michael, this question is for you. Is it possible for governments to regulate digital payment systems designed by non-banks in the same manner as traditional banking transactions? What are some of the challenges around this?
Sure. Yeah, I think, to the first part, I think it's very possible to use the same principles, and I can only speak to the U.S. Framework on anti-money laundering, but ours is very principles-based and technology neutral, and the idea is to be sort of more of a constitutional perspective, so that it's general principles of sort of reasonable risk-based mitigation. And then from there, it's meant to be very flexible, so that you're not sort of needing a new manual for every new idea that comes out. And so the idea is, yes, a lot of the principles, no matter whether it's tablets or yield farming with YAM tokens, the principle is understanding your counterparty and what is a reasonable risk-based approach to sort of provide some confidence that you're not funding North Korea or something like that. And so I think the principles certainly do. There's a lot of, there are new challenges to it, and I think, but we've had that. We've gone from cash to wire transfers, we've gone to credit cards, prepaid cards. There's been a lot of changes, and we've been digital effectively for a couple decades. So I think part of this is the regulatory framework staying flexible. And actually, just 2 weeks ago, FinCEN put out proposed rulemaking on anti-money laundering effectiveness that would actually solicit that actually was soliciting the public and saying, okay, we think it's yet another time to sort of make sure that there's plenty of flexibility and prioritization, and so opened a period for formal comment from everybody, in fact around the world even, to comment and say, okay, here's our proposal of how we can make the anti-money laundering system more flexible and more priorities-based, give you an ability to move your resources where they should be and to align the priorities together. So, I mean, that sort of flexibility and constant communication is what allows the innovation to happen. And then I think just in terms of the challenges, you have a lot of folks coming into the space that have not been in the financial space for a long time. And so whereas before you were sort of innovating with banking people that were used to the risk-based principles, you now might be dealing with software engineers in a very blurry space of, well, I've developed a smart contract and I'm going to deploy it, and they don't have any sort of financial experience in the past, so it all feels very strange and new. And so part of what we're doing is spending a lot of time on education to make sure that the principles are clear, to what Jennifer and Stephanie said, you know, that there isn't sort of an anxiety about it. It's, hey, it's just reasonable risk-based. We have an Innovation Hours program that's totally virtual, so we meet with companies around the world. Anyone can sign up on the website and talk through sort of what's the innovation they're doing. Here's the principles as they apply. And so I think in that sort of the challenge being the blurrier space of not just sort of you're a bank and you decided to offer a new product, but you're a technology person who's never done this before, and you've gone on to GitHub and taken an open source smart contract and come up with a new liquidity protocol, that we can get together and talk through that. But it's that sort of diffusion, I think in a good way, the democratization of access to it, but it brings a lot of people in that don't have exposure to this before.
Thank you, Michael. Hey, you mentioned borders earlier. So are regulations portable across borders, and what are governments doing to ensure that protections for users are international in scope in your view?
Regulations are, you know, they are definitely a lot more applied within the border. But as I said earlier, when internet makes things global, the problems also, new problems rear their head, and we all kind of work together in figuring things out, how to make those work better together. I think there are specific cases where we are starting to figure out how to work with governments in making things happen across border. The way I would think about it is when global companies actually operate in payments, like for example Google Pay operates in 30 markets, it essentially is like we are doing it in every market with each of the regulators in those markets. So it essentially is we play the payments game, but we actually play per the rules in every country. Like we don't take a baseball bat and go in India and try to play cricket with it. It's actually, we try to figure out what is needed in every market, which, you know, technically does not necessarily make it easy because the kind of scale which we rely on is not always there. But we have creative ways of figuring out how to build software and product and services such that they can be localized to every market well.
So Michael, what's your quick comment on this question?
I think, I mean, Piyush is right. Like it's a mixed, it's a double-edged sword a bit with the localization piece, because I think for us in the government, we need to be harmonizing across so there's enough baseline that Google doesn't have to rebuild for every country. You know, that's not going to help innovation. And I think the flip side is you want enough localization that a particular sovereign group can decide we're willing to take more risk here on something than someone else. And this is a conversation we have almost weekly with state regulators and saying we're happy to provide help on sort of baselines, but we also want to allow you to do your piece of it and take more risk if you want to. And so it's always a back and forth sort of a balance.
Thank you. Jennifer, this next question is for you. So do you believe that digital payments are robust to risk regional and global financial stability? For example, the effects of climate change or cyber terrorism?
You know, I think we're always learning. I would never say anything bulletproof because the vector of change is pretty advanced in that space. The good news is when we saw COVID, what I saw aside the promise, well, we didn't have an outage or a true resiliency issue. We did have a workforce resiliency issue. We did have an operational resiliency issue, and I was pleasantly surprised to see how agile and flexible the payment systems were. We saw changes in dollar values for contactless go up. We saw changes in fraud strategies in order to reduce the number of declines going through because people were needing to buy food. And we saw changes in rewards programs in order to reward people for not traveling anymore but for making other purchases. So I do believe the true resiliency issues of global disasters, cyber terrorism, we're only as good as yesterday. We've got to be a lot better in the future. That being said, there are people that think about this on a constant basis, both on the bad side and the good side, and it's a constant battle. But I would say we are continuing to learn. When a crisis happens, we're continuing to learn and continuing to challenge ourselves on how can we avoid that in the future. And then, most of our disaster recovery exercises never considered a global pandemic. Okay, great. So we've opened up our brains on risk-based policies associated with more global interconnectivity issues. And so I'm very, I would say, optimistic about it, but I would never say that, yeah, we're good, we're ready to go, because the world is changing so dramatically.
Thank you, Jennifer. Stephanie, how are you working with the broader financial system to harness the potential of underlying blockchain technology and Bitcoin?
Sure, Dana. So like most other financial institutions, we're really actively involved in discussions going on in the industry and with regulators to help us explore blockchain and the potential use cases for our business. So we've actually set up an enterprise blockchain lab to help us develop some in-house expertise with the technology and look at opportunities to evolve our products and services. We're actively participating in some of the industry consortiums, including the Hyperledger project, which we joined in 2017 to help us just increase our industry presence and influence. And we're experimenting with a variety of use cases across both consumer and business use cases. So one example is we have used blockchain technology to help power rewards programs for merchants. Using the technology, we're able to enable merchants to have greater flexibility in the types of offers that they can create and how they can tailor that using their own data and distribute those offers in their own channels versus being dependent on Amex and the data that we have in our own communication channels. So it's been exciting to kind of learn about the technology and think about new uses for it. The one other thing I would just keep in mind, though, is, I think while the potential for blockchain is really exciting, the technology itself has some pretty unique qualities about it that, when you think about how to implement in different contexts can also pose some challenges. So, blockchain is immutable, so by definition it can't be changed. American Express is known for our world-class service that we deliver. What if a customer called us and wanted to dispute a transaction and we said, we're sorry, we can't reverse it? That wouldn't feel too good. I'm not saying that disputes on a blockchain are impossible, but it can be tricky. So it goes back to this idea of really it's not just the technology itself, but it's how are you using that to really solve a need for a customer and doing that better than you could do today.
Absolutely. So Peyush, what is your perspective on the regulation of cryptocurrencies and stablecoins?
Yeah, I have to answer this question in front of Michael. And please forgive me if it appears a little too simplistic, my perspective. But from first principles, the way I think of cryptocurrency and stablecoins and all is imagine there's a highway which actually connects a lot of cities, right? And there are a bunch of cars roaming on those highways. and then there are ramp-offs into specific cities. So that is how I kind of think that these highways essentially what cryptocurrency and stablecoins are like. And the regulation really comes in at the ramp where the government say, can you operate in my city or can you not? And then you have to kind of go through the ramp and adhere to whatever is the requirements from the government. And it can range from saying, nope, sorry, this is close to you and you cannot be in here, or it is like it's free, go and feel like my city is part of your highway. Obviously, those are two extremes. But the regulations to me are actually the government coming in and kind of saying, okay, this is how you do this. And they really have to balance the one side creative freedom, which you get with all such disruptive technologies. On the other side, the requirements they have to manage the environment in which money flows in their countries. But one thing I will say is like the people who are manning these toll booths have the biggest guns in the world. So whatever regulations they have, they will do the right things for the cities, and the cryptocurrency and stablecoins, in my view, will actually end up adhering to that. So there'll be some good solutions which will come out of this. One example is like obviously the central bank digital currency is one example of like many countries are thinking through. And as Stephanie was saying, underlying technology allows many things inside, like federated trust, open ledger, immutability. Some of these might be applicable when a particular city, if you will, tries to adopt that particular traffic. And they say, okay, these pieces make sense for us, these pieces don't. Central bank digital currency might not want a federated trust, might actually have a centralized database. Who knows, right? But I'm just speculating, but I think that's from first principles, that's how I see regulations playing a role in this ecosystem.
Michael, I see you shaking your head. Any quick comments?
That was great. Yeah, that's just.
We'll move on to Jennifer. With the proper degree of regulation and cooperation, how do you envision digital transformation to make access to capital and banking more egalitarian across regions?
Egalitarian across the regions. I'm going to go back to something Paige mentioned previously. It's the data. Data and transparency and availability of that is really going to move the needle. I mentioned before just providing end users, whether they're small businesses or whether they're consumers, complete access to their information, helping them make better decisions, whether it's cash flow forecasting, budgeting, whether it's liquidity management, whether it's moving money between accounts in order to manage their financial lives. I believe this democratization and openness of financial capabilities is great. I mean, I'll just use an example. The networks of the world, Amex being one, are really, really focused on broadening the horizons outside of just basic cards to banking type payments, money movement, traditional real-time payments. And so they have the power and network and endpoints, frankly, to make that work and to provide a lot of access. So I'm very optimistic about getting financial services in the hands of people that need it, providing them the guardrails and the regulatory landscape to protect them, providing the data for helping them make better decisions. And so I think we're seeing that happen now, and these open networks and ecosystems of partners to make that happen. The great news is that one individual organization doesn't have to take it on their back to solve this problem. We now have a system of partnerships and rules-based frameworks to make the interoperability work, so that we're able to make a business case, frankly, and to create an ecosystem of technology and access to a number of different people. So I'm pretty bullish on getting there, and I think it's going to happen a lot faster because the technology is at a lower cost. It's more accessible. You've got the mobile penetration that is the highest possible. So I think all of these things are coming together, and they're happening much faster because of our COVID issue. So I think we're going to see that propel quite a bit. And I still don't think we're going to go down 30% in cash usage in 2 years, but I do believe that all these things are working together to create that egalitarian approach.
Thank you, Jennifer. It's been a great discussion. At this time, I'm going to hand it off again to my colleague, Nika, to discuss cybersecurity and geostrategic challenges.
Dana, thank you. Before we launch into our third segment, I would like to remind all our participants that please feel free to send us a question at any time during the discussion. We will get to those during our Q&A. So, now technology is a hot topic these days. It unites as often as it divides. Most, if not all, governments and businesses care about financial inclusion, financial stability, cybersecurity. But there are also areas where there is a lot of divergence, notably technological supply chains where geostrategic rivalries are impeding global collaboration in key areas. Let me start with an area of convergence, which is cybersecurity. Before I bring in the panel, let's start with our next poll. Could we please launch our third poll, please? So digital payments face serious cybersecurity risks such as online fraud, information theft, and malware attacks. What is, in your view, the most important reason for cybersecurity breaches? Lack of user awareness about cybersecurity risks and prevention protocols? Weak security of devices such as mobiles, computers, or other Internet of Things devices being connected to make digital payments? Weak security of platforms themselves, such as websites or apps being used to make digital payments? Or is the biggest risk organized attacks by state or non-state cyber actors? Let's give our participants a few more seconds to cast their ballot. We are nearing towards some kind of a majority opinion. Oh, no, it's changing. And let's close the option. So, 42% think that lack of user awareness about cybersecurity is the greatest risk. Well, that is very exciting. Michael, do you agree with that assessment? Would you have chosen differently? Do you see the risk lying elsewhere?
I was looking for an all of the above. I think that's probably where I would have landed from the standpoint of a financial intelligence unit who's sort of collecting exactly this sort of indicator of compromise information from financial institutions and aggregating it across to sort of put it back out to industry. We see all of it, basically all of that happening. It's truly a mix, an almost even mix to some degree, I think. We actually just this morning put out a ransomware advisory that looked at a lot of this to sort of feedback. Okay, here's some aggregated indicators that we're seeing, and it really is it's a bit of a mix, actually. Yeah.
Yeah, I mean, as the polls reflect, you know, about over 30% think that platforms are to blame, and about 21% see the role of organized crime behind it. Piyush, do you agree with this assessment?
Yes, I think all of the above is probably the right answer here. I completely agree. It's a new space. We haven't, thought of everything. People are new to this technology. Bad actors are coming in. They learn faster because of their incentives. There's a lot of things which are going on, and therefore we have to solve all these problems, like Internet of 1990s.
Yeah. Stephanie, what do you think?
I'm with Piyush and Michael. I think all of the above, all these things are really important. It's not any one, but if there's any vulnerability in a payment system, it will get, exposed. And so, that's why whenever we're designing new products or services, it's really important for us to have multiple layers of security throughout the end-to-end payment system. So yes, all of the above for me too.
Jennifer, all of the above?
Platform, I would do the last two, the platform and the organized attacks, because the platform is kind of where the money is. I look at the first two as being kind of onesie-twosie issues, but when you are able to find a vulnerability in a specific platform, that's really where you hear that, quote, giant sucking sound of data coming out, and then you feel the impact a couple months later once it's sold on the dark web to the cyber criminals. So I see those last two working hand in hand. And to me, that's really where you have the kind of very disruptive, large volume of activity. Now, I say that, but then, and here's an example. Like large, the SWIFT platform had some exposure a couple of years ago, and that was, when you're dealing with large value cross-border payments, that was a significant event in the industry. I do believe that we have worked on that, and to Stephanie's point, worked on multi-layer security controls to combat that and learn from that. But to me, those platforms that are dealing with large value payments, it's just like Bonnie and Clyde. Why do you rob banks? Because that's where the money is. That's the same thing. Why are you robbing platforms? Because that's where the money and data is, frankly. So that's my perspective on that.
Okay, Jennifer, let me invite you to please elaborate a little bit more on that. You mentioned some of the businesses and their vulnerabilities in the past. Do you think that governments and businesses are doing enough to address the key cybersecurity challenges that lie ahead of us as the economy as a whole digitizes, not just the use of digital payments?
I think it's adequate. I think there could be more. I'm never going to say, yeah, we're doing enough, and because tomorrow there'll be a headline and, Michael will laugh at me because I can see him chuckling right now. Private-public partnership is incredibly important. Even in the United States, we have the Federal Reserve trying to create a similar vernacular on how fraud vectors work. We financial institutions, financial institutions report fraud by payment type, not necessarily how it happened. And sharing of information has been a little bit of taboo, right? I don't want to expose to my competitors where my weaknesses are. Even if it's trying in the spirit of everybody, protecting each other and protecting the industry. So I totally believe that there's more opportunity. I don't have a suggestion for that right now, but I do believe that the sharing of information, sharing of lessons learned, sharing of data can only grow the overall knowledge base in order so we can protect all of our flanks, if you will. So I don't think we should ever rest on this particular topic because the enemy is not.
Sure. Stephanie, I'd like to go to you next, please. If we drill down on the issue of digital payments specifically, do you think that providers of such services are adequately prepared to deal with the cybersecurity challenges that we face right now?
Sure. While the shift to digital has certainly resulted in some new risk vectors and security threats, it's also resulted in some really powerful new capabilities to help us combat and reduce fraud. So network tokenization is a really good example of that, which came about really with the advent of mobile payments. Tokens replace a customer's actual primary account number so that it doesn't need to be used in the transaction flow. And we're actually able to enable things like specific domain controls around tokens so that we could restrict access and use of that token to a particular merchant website, device, or channel. So the token is actually really much less useful if it were to be compromised versus the actual card number. Another good example is the arrival of secure remote commerce. So this is a new standard that we're actively collaborating with the payments industry and the W3C on to help facilitate a more secure and consistent online checkout experience for merchants. So with SRC, we're able to use both dynamic and encrypted data to help enhance the security of online transactions, and we can actually help eliminate the need for merchants to store card payment information, which is obviously better from a customer protection standpoint. So yeah, overall I'd say I think we're partnering really closely with digital payment providers to, with some of these new capabilities to help reduce fraud.
Okay. Michael, what role do you see the regulators playing in ensuring the cybersecurity of the digital ecosystem? Is it, like Piyush mentioned a few minutes ago, at the rams of the highway, or are you front and center?
Yeah, I think it's a mix. I mean, certainly at the highway, for sure, and then I think to partly to what Jennifer was saying on the info sharing piece. I mean, I think to some degree we have to be the weather helicopter and traffic helicopter that's also saying, hey, here's 50 different things we're seeing across different wrecks out there and vulnerabilities and guardrails down, that sort of thing, and getting that out and sharing that information, which is a big piece of what we've been pushing, particularly in the last year, even before COVID. But that's why we put out a ransomware advisory today. We've put out 3 advisories just on COVID vulnerabilities from benefits fraud that we were seeing, and here's the indicators that we're seeing. Here's the flow of indicators that should tell you as a bank or as a cryptocurrency exchange that you're seeing vulnerabilities and specific cybercrime from state and non-state actors. So part of it is for us is if people are going to report to us, then we need to aggregate it across and get it out. Some of that's public. Some of it is the information sharing that's more tactical. So we created something called FinCEN Exchange, where we actually get together in a closed room with industry and law enforcement on really specific issues like business email compromise and cryptocurrency and loan actor threats, stuff like that, and share tactical information to work on it. So part of it's the information sharing, part of it's setting standards too, and that some of that is in the infrastructure space. So we're working on in the financial, but we're also working with other government entities on the digital identity piece, because a lot of this comes down to, at least the trends we're seeing is sort of credential stuffing, synthetic identities. I think we're seeing about 5,000 identity compromise based fraudulent transactions reported a month to us. I mean, that's an enormous amount. So part of it's working with industry. What sort of standards do we need to put in place for security? And then how do we sort of facilitate the innovation that's going to get us to a point where we have less synthetic identity fraud? So it's sort of putting all that together, I think, is the government role.
Thank you, Michael. Jennifer, could you reflect a little bit more on how you see the emerging markets handling this issue of cybersecurity, where the awareness about cyber hygiene is lower and the resilience of the cybersecurity infrastructure is much lower?
I mean, it's a challenge. You know, I see a lot of this being handled primarily by the technology firms and less about, you know, private-public partnership among fragmented groups in the United States. I certainly think there's a long way to go there, but I do believe that you know, I look at the telecommunications companies as being kind of the starter package for that. But I just want to emphasize how critically important it is, particularly in emerging economies, where you've got to get that trust and you've got to get that cultural change to adopt. Not out, you know, in some cases they're adopting out of necessity, but these people are extremely vulnerable to these types of activities where they're wiped out. There's no foundation of a clawback. So I do see that the telecoms being and technology companies being the center post and pushing the envelope there.
Let's move to another area of convergence in this space, which is about a concern among competition authorities in several parts of the world, not just in the developed world, but also in parts of the developing world, about data monopolies, the power of big tech, and their ability to leverage their dominance in one part of the digital space to gain a foothold in another aspect of the digital space. Piyush, I want to go to you with this question. So big tech, such as Google and Apple, but also in China, you know, Tencent, Baidu, or Alibaba, face increasingly difficult questions from regulators and politicians, and also some probes from competition authorities about their ability to, in effect, limit the role of smaller players in this space. How do you think a company such as Google can ensure that you have a positive conversation on these issues with regulators, but also your users?
Yeah, I think I have to say I respectfully disagree with the implication of the question.
Finally, some disagreement. That's absolutely
I will tell you
fantastic.
one thing. Yes, and I will tell you. So there are two different ways I will probably present my answer. But overall, the summary to me is, and Google and everybody I work with, irrespective of the company they are in, I feel like we all have a strong passion to help the user. Google has a fundamental belief that focus on user and all else will follow. And that is what has driven our success. Our products are loved by our users for that reason. But here's what I'll say. Imagine the world without some of the things which we build, and see how digital payments looks. And then you'll see why innovation comes through. Let's just go before Apple Pay or before Google Pay were there, and obviously we have worked very well with credit card companies like Stephanie was saying, network tokenization. But before that, in order to make a credit card purchase, which was the best form of digital purchase, if you will, you had to give every bit of that information, which the merchant could then use to impersonate you on the other side. It has happened to my wife. She gave a waiter her credit card, and the guy went out the back door and bought two cell phones from the Sprint store next door, right? Because there was nothing which stops that from happening. The information she gave to him was enough for him to impersonate her. That's not the case with Apple Pay and digital pay, right? The fraud is much less likely because the device is actually what the credit card is bound to. You have to have access to the device. Now, when you have access to the device, it's securely stored within that. You cannot easily hack into the device. It is protected through biometrics and other kind of authentication mechanisms. There's a lot of checks and balances, and I'm sure that Stephanie will agree, it reduces the chances of chargeback and fraud and things like that. Now, that's an innovation. Who benefits from that? The end user benefits from that. The merchant benefits from that. Everybody in the ecosystem benefits because we are removing these kind of frictions from the system. Forget Google. Like, take PayPal for an example, right? PayPal is an innovation, is a pioneer in digital payment space, right? You all remember the first time you learned that you could actually pay somebody by just sending money to their email. Before that, if you went out drinking with your friends, I don't know how many friendships were lost because people forgot to settle their bills later. But it was so much easier now that, okay, well, I can do that. In China, if you go, in WeChat has millions of users who actually use all these micro apps which are there inside WePay. Right? Now, inside WeChat, these micro apps are actually great innovation, right? A lot of people are able to conduct their business and live a livelihood because WeChat is making that happen. Street vendors are accepting money, and we go back to the MAID example, right? There's cash and security and all that. All of these are examples of innovation. The companies were not born big in this space. They actually added a lot of value to users, and users adopted them. That's how I actually see the cause and effect. Here is a classic example I'll give you of innovation helping. Facebook has Facebook Live. Facebook Live is what merchants in Vietnam are using to do QVC equivalent. You remember the QVC channel which used to come on television where people will show their wares and have you call in orders? That's what merchants in Vietnam are doing on Facebook Live and are able to boost their business. And not only that, once they generate the demand, they are able to negotiate better from their supply chain. And all of this is happening. So creativity is popping up everywhere. I'll give you one more example. We launched a platform called Spot in India. In India, we have over 100 million users who use our product. We launched a platform called Spot. What that allows one to do is what Starbucks, as an example I think Stephanie was giving earlier, what Starbucks has done is very well, which is, hey, you keep my app with you, and I will, lower the friction of you interacting with me, whether it's loyalty, whether it's purchase, any of these things. But not everybody is Starbucks. Well, how does everybody get onto that bandwagon? How do they leverage the fact that everybody has a phone in their pocket and they can actually reduce friction all the way? So we announced a platform called Spot. Over 100 million users use our product. It takes you 5 minutes to go build a Spot, and you will get person's identity, payments, and all that. Of course, everything with their permission. But you don't have to worry about all the frictions that it takes for somebody to start transacting with you. We take care of all that. You do your business, right? So I feel like innovation is the core of what this industry is trying to do. It's not my place to speculate on the other reasons why people, are what they're thinking and what they're looking at. But I will say that the fundamental thing that follow the user, focus on user, all else is follow, is what everybody does. And all of us at Google, for sure, we continue to collaborate with the regulators across the world as the laws evolve. So, as they evolve, we keep working with them. But I think fundamentally we are actually fostering innovation, not doing anything else. That's what keeps us out, gets us out of bed every day.
Thank you, Piyush, for that impassioned defense. I'm sure we can agree that this is a thorny issue, and I'm sure we can return to this in the Q&A, and I'd like to remind our participants, please send us questions. We have opened a very interesting can of worms here, which we can happily explore later. But let me, for the time being, move to an area of growing divergence, and we've already had a few questions from our participants on this. And Michael, if I may, I'd like to go to you first, please, about this question. So the US-China technology rivalry is intense, and it's spreading to new areas of technological innovation to include 5G, social media, semiconductors, trade, etc. What challenges, if any, does this rivalry present to US regulators? And I appreciate that that is the only perspective you can comment on. What challenge does this rivalry present to US regulators in the digital payments ecosystem?
Yeah, thanks. You know, from my perspective on the illicit finance side of things, the question in sort of any cross-border tension is going to be the information sharing piece of it. And so that's the first that comes up. I mean, when most of these cases, and Piyush mentioned before, it's all basically transnational at this point. So, and particularly when you have cryptocurrency, I mean, you could have peel chains that are crossing hundreds and hundreds of jurisdictions in a minute. So for us, there's an information sharing element that, even though, like in the blockchain space, there's an element of transparency and traceability that allows you to identify them, you still have to eventually have the underlying information to try to find out, okay, who is this person behind sort of this child exploitation material that we've identified being sold from in one case it was South Korea for a welcome to video case, and it was sort of 8 terabytes of child exploitation material, but you still were able to identify the jurisdictions, but you needed the information. And so this sort of, to the extent that there's a tension and an unwillingness to share information, that makes doing these cases and finding victims much harder. So that's one piece of it. And then I think the other piece, which is less direct, but I think the privacy issues and sort of the, you know, to the extent that the technology rivalry, including, which isn't between us and China, I think it's between people around the world, and China is the privacy issue and the sort of surveillance technology. And I think to the extent that that's creating more of an arms race than a policy conversation of anonymity technology that makes it much harder through mixers and other obscuration techniques to be able to help victims, that's not a good thing. But obviously, you know, to the extent that they're ramping up surveillance, whether it's through their digital currency, that's going to have the sort of resulting effect on the other side. So that's a complicator for us, for sure.
Thanks, Michael. Piyush, I want to get the business perspective on this. You mentioned repeatedly during our webcast today that while Google, for example, is a global company, you work very closely with national regulators. But how do providers of digital payments navigate the increased nationalization of the production and provision of technology?
Yeah, I think this is something which we also you know, try to figure out how to make it happen. As I was saying earlier, right, we are trying not to like play baseball in a cricket-loving nation. But the way one of the things which mental model of thinking about it was something like this. We came from the internet age, and we are like, okay, you build it once, everybody uses it everywhere. The localization of the product is limited to text change, UI change a little bit, and you know, some specific set of local laws. But laws around money are very different. Not only laws around money are very different, they're very different and very well accepted. Even the most libertarian people will actually agree that the government should actually regulate how money flows in that country because it helps the society, it actually maintains law and order. There are many reasons, and you know, there are other experts here who can tell you why, but let's assume that money is different things. So now, we came from one world, and digital payments is a confluence of the two. So the way we are actually thinking through is like, when we were not there, the world of money looked different. You landed in a country, you had to go to the money exchange at the airport counter. You could not even transact in that country unless you went through that mechanism of what government had said you have to do. So if anything, today things are looking slightly better, right? So the thing is, you are coming from two different sides and you are trying to merge. On one side, we built once and we were able to run it everywhere. On the other side, everybody operated differently the minute borders crossed. And we are trying to come in the middle. So I think it's just the rule of the game, and we have to figure out how to do good product work, good engineering work around this. One of the simplest examples I will tell you is like, we saw the success of payment rails in India, and that was mandated by the Indian government for all the banks to participate in, and we built things on top of it. Now we have joined with Gates Foundation and others in partnership with there's a Mocha Loop Foundation, which is trying to do similar digital payments in many of the other countries, and other governments are looking at adopting that. So we are trying to figure out what works well and how do we take it to multiple countries, and at the same time being very cognizant that we have to become more efficient at building software which runs in each market, adherent to that market.
Fair enough. Stephanie, does your perspective differ? Do corporates need to invest in special measures and operations so they can continue to work with China, but also Western economies, and indeed all other emerging markets where rules will be different?
Yeah, I would tend to agree with Piyush, and I really like the analogy you gave around playing cricket with a baseball bat. But yeah, I mean, payments are really localized wherever you go in the world, and sometimes there's consistency and sometimes there isn't. And so we're really always needing to meet local laws and regulations, and that's part of really what makes the payments ecosystem really complex to operate within. I think a good example of that is just how we protect and store data and whether or not it can be transmitted across borders, and that differs by region. Or if you look at something like open banking in Europe and how that has become a brand new framework in which we've all had to adopt and navigate. And I also think what's interesting is, what a party needs to do can also depend and vary based on their role in the payments ecosystem. So what the networks and issuers have to do is really going to be different than what a tech company does and the rules that they need to follow. So overall, I would say payments are really local. And so we are obviously investing in special measures to make sure we're taking a hyper-local and market-by-market approach to payments, but this is really something that's true across the board and not necessarily specific to only the U.S. and China.
Fair enough. Now let's take questions from our participants, and we've been receiving some very interesting questions. Dana, over to you.
The chat from our participants. So I know we addressed this a little bit, but this question is, what is the risk of the U.S. versus China tech war going to do? So if anyone would like to elaborate further on that.
I think I've already spoken to it, but so I'll give other people a chance. If not, happy to talk a little more.
Sure, please reiterate.
So I mean, I'd just say I think it's like any competition, there's pros and cons of it. The con being potential distraction of resources and focusing on collateral battles, that sort of thing. The upside, I think, is driving conversations about innovation domestically. Certainly, I think it's both for industry and for government. Facebook's had a response with Libra to the potential digital yuan, and the U.S. government, you've seen in the reporting, the Fed, sort of exploring partnerships with MIT and looking through what it could look like, and certainly anytime Mark Zuckerberg's on the Hill, he's talking about the threat of the Chinese yuan, digital yuan, and how we need to provide a place in the U.S. for this sort of innovation to make sure he's working with the rivalry to encourage innovation. So it's healthy and a distraction, I think, at both, and to some degree it's the privacy issue too that I think is going to be critical for everybody to navigate.
Thank you. Another question is, are payment solutions going to converge in the near future? at least at a regional level? So for example, major economic unified areas or continents, or do you expect a higher fragmentation leading to a larger complexity to manage for businesses and also to handle for users? Who would like to tackle that question?
I'm happy to give my perspective on this. Well, I've talked about like how it's a local game. I think one of the awesome things with technology that exists is it hides complexity away from you and gives you a very useful interface. Things which would not seem very possible before become possible. Google.com search is a great example. You type into a search box and we find whatever you need. It's obviously non-trivial to do that. So while there will be a lot of local rules and laws and all of those, being compliant with them and being able to do the right thing, all of those are problems we think technology will solve, such that the end user actually can work in a very seamless, frictionless way in doing things. Like remittance is actually a great use case between many countries. And there is no reason why we will not be able to build a product which handles all the problems and offers you the service as an end user such that you can run your business without worrying about the problems.
Thank you. Jennifer, I know you spoke about this a little bit before in your comments from earlier, but what are some of the special challenges of emerging economies as they attempt to boost financial inclusion?
Well, I always go to the hardest one is the economics. What are the economic incentives for technology players, financial services players, and frankly, in some cases, where cash works, the actual users? In the United States, we have a very vibrant economic incentive program in the payment space. I mean, we don't dominate necessarily in technology or adoption because we're highly fragmented. We have 11,000 financial institutions. We have a vibrant innovation platform. But other countries are ahead of us in terms of adoption of digital payments for a number of reasons. But I do believe that I think that the opportunity really is. The opportunity is really going to be the dealing and tackling with the economics. Now, the other thing that's going for them is other emerging economies also have a little bit more central bank or regulatory infusion or mandate authority that we do not really have a lot here. So once they get everything I guess corralled and they make a decision, they can enforce or enact, or maybe not an economic incentive, but it may be a negative incentive, but get actors and players to actually make it happen. So if you can't handle it economically, you can handle it from a regulatory perspective and make it happen.
Thank you, Jennifer. I just want to remind our participants that you can continue to post questions in the chat box. Okay, here's a question that I think we can aim for Stephanie. What economic benefits can businesses derive from offering secure and seamless digital payment solutions?
Sure. I mean, I think it's really important for businesses to offer a variety of, choice to customers for various payment options. Because for certain customers, I think the kind of payment options that are available to them might drive loyalty and preference. So customers will certainly consider how clean and contact-free is this payment method for me to use? Is this easy for me to use? Or, do I trust this solution? Am I comfortable sharing my payment information? I think that last point on security and the perception of security is really key, especially in this world of big data breaches. So customers really want to feel and be protected and have trust in the places where they shop and transact. And how a merchant implements payments is definitely something that customers will care about. Especially some of the new customers. They might be worried about paying for the first time. And so seeing a familiar payment option might be reassuring and just help drive that conversion.
Here's another question I think almost everyone can weigh in on. So investment in technology appears to be a focus of proposals for COVID-19 recovery, especially in Europe and in the U.S. How are companies taking advantage of these opportunities? So Peyush, would you like to weigh in first?
Sorry, I could not hear your question completely. Can you please repeat? Can you hear me?
Yes, I will repeat it.
Yeah, sorry.
So investment, no problem. Investment in technology appears to be a focus of proposals for COVID-19 recovery, especially in Europe and the U.S. How are companies taking advantage of these opportunities?
So this is, I will give another analogy of how we are thinking about it. And like imagine there is a very large placid lake surrounded by hills and mountains, right? And a big boulder falls in. Now what happens is a lot of water splashes all over. Some goes up side of the slope, some goes over the hills into other valleys. What we are trying to think of is this lake is the world human behavior, and the boulder is COVID-19. It has disrupted all of our behavior. So what we are trying to understand is, now that like we are all completely optimistic that the boulder will disappear soon. I mean, we have, like in my life, I've never seen all of humanity focused on any one challenge like they are right now. So the boulder will disappear. Now when the boulder disappears, some of the water will recede back to where it was, and some will actually form lakes on the other side, and that will not come back because the activation energy provided by the boulder ended up creating new lakes. That is what it is, like which behaviors will actually turn into new behaviors which the people will not want to walk away from, and which behaviors are the ones which happen to be right now, and then people will likely go back to their normal behavior. Like abstaining from cinema theaters and watching movies on streaming, maybe that will change because people go to cinema theaters for a lot more than, you know, just watching the movie. Just to give an example. But at the same time, we have seen in the industry, a lot of people are starting to invest a lot more in video technology. I mean, just the way we are holding this conference right now, a lot of companies are starting to say, hey, work from home and remote work is a lot more acceptable. That is having a different kind of impact, in some cases very positive, in some cases negative. All these things are happening, and some of those, like for example, working from home being more, for companies being more forgiving of that, is actually likely to be a behavior which will continue. And then there are technologies which we are building that the answer is not really clear. I mean, you know that contact tracing is something which is very privacy sensitive problem, but a lot of countries have imposed contact tracing on their citizens, and people accept it because they don't want COVID to be a threat. When COVID disappears, the question is, will this be no longer a technology which will be of any use, or will be of great use in other ways, which I cannot think of today, honestly, or will it be something which now people agreed to and now is being used for reasons which they did not want? So it's hard to tell, but that analogy is the way we're thinking about, like, okay, well, is this something which is a lake on the other side, or is it something where the water will recede back to normal?
Thank you. Great insight. If we don't mind just pulling up our closing slides, I'd just like to conclude today's discussion. And I'd like to thank all of our speakers for joining us. I'd also like to thank our audience for taking part in this conversation as well. If you enjoyed today's program, we hope that you will join us for our entire Global Horizons virtual series. You can see the various topics we will be covering through the remainder of 2020 on this particular slide. Our next topic will focus on the looming U.S. presidential election and how each of the possible outcomes could impact businesses and the economy, and also how corporations and also businesses can better prepare for, well, corporations and governments rather can better prepare for what's ahead. Sorry, I'm just, and also you can register for the entire series at the website shown below, which is www.conferenceboard.org/webcast/Global Horizons-virtual. So thank you everyone for participating, and this ends our session.
Thank you.
Thank you.
Thank you.